Hi there, Serial Trader here. Just going to do a check-in on Facebook. So, today was interesting. So we had a spill down and we did break out of this parallel trend channel and we went past that 100% relationship between potential A and B, A and C, which would be very typical. But we didn't go down to that 1618 relationship, which would be a common wave 3 relationship between wave 1 and 3 off the termination point of wave 2. Okay, so not to mix words or confuse too much, but this is a bullish hammer. Okay, meaning that lower prices were strongly rejected by the market. That's why you have this long lower shadow and then this small real body, which is considered the hammerhead. So think of the shadow as the handle and then this little real body as the hammerhead itself, like a little sledge or something. And I'll mention that Facebook actually, even though it closed lower than it opened slightly, and you can tell that by the red real body, it actually still closed up above Friday's closing price, which, considering the overall action, that's pretty impressive. And I must say that even when you're doing the Elliott wave principle, you should emphasize closing price action more so than intraday price action. And if you did that, just let me give you a visual here. It gives you a greatly different picture. See, that's close only. And if you do close only, well, that just looks like a nice ABC contained within this parallel trend channel, not even quite hitting that 100% relationship, and possibly ready to bounce now. So it's good to keep that in perspective. Remember, when Ralph Nelson Elliott, the guy that actually discovered the wave principle and observed all these patterns and cataloged them originally, that's why it's called Elliott waves. His name was Ralph Nelson Elliott. He only looked at the Dow Jones Industrial Average, I believe in the 1930s, and he only looked at closing prices. So he never had intraday prices when he was making up all his rules and guidelines and things of that nature. So I'm not saying ignore intraday price action when you're doing analysis, but keep it in mind that there's always a different way of looking at the market. Okay, and you need to look at them all holistically and come to the best conclusion. So just using my best personal judgment here, I'm still thinking this is an ABC, but I've left the 1, 2, 3 potential just in case, right? I mean, if this fails quickly and we break down and start really closing outside this channel, I'd have to embrace that we're going down impulsively. But that's just not what's happening right now. And I'm still favoring the upside personally. But I'll tell you how I'm playing this. Even though I like the setup, I like the internals. I mean, it's a beautiful pattern, very textbook Elliott, zigzag, ABC down. You don't have to die on your interpretation or your analysis. You can make it so that, well, if you're right, you're going to make a lot of money. But if you're wrong, no harm done. And I just explained something of this nature in the last video on SPY, SPY, and I mentioned something about a back spread. In that case, it was a put back spread. Well, I'll tell you what I actually did with Facebook, my own personal trade on it. And I did a call back spread. And let me just flip over to this page. Okay. And here's what I did. So I sold 10 of the Facebook July 2018 monthly call options at the 160 strike. So I sold 10 160s. And I bought 24 180s. Okay. So not quite, approximately a 2.4 to 1 ratio of long to sold calls, okay? So what does that mean? That means that, let's go back to these purple and teal lines. So the purple line shows you that, okay, right now, at today's date, basically if we go down, very little impact, you're basically flat. If we go up, well, okay, if we go to 190, we're looking at a $12,000 profit. If we go to 200, 21,000. If we go to 210, 30,000 plus, and on we go. If we go to 230, ooh, you're getting up to the 50 plus thousand level. And if this really is an ABC and we're going to go up impulsively in the next wave up, getting to 230 before July, that's not unreasonable at all, the way Facebook can move. Now, again, if you're totally wrong, no harm done. And in fact, if you look at the teal line, so if you're totally wrong and Facebook just tanks, and this is the end of Facebook as one of the primary FANG stocks, and the whole market just tanks, etc. Well, guess what? You'll still make $640 because that's the net credit I established. So anything at or below the strike price of the sold call, which is 160, so anything at or below 160 at expiration equals a $640 profit because that's the net credit you established. Now, here's the risk, if you want to call it that. So if you hold this all the way to expiration and Facebook just stays in a narrow range, okay, between 160 and, it looks like just over 180, 183, 184, that is your loss range or your risk range at expiration. And as you can see, leading up to expiration, and certainly right now, there's no risk at all there. In fact, that's pure profit the higher you go. And then your maximum risk is right there in the middle. But of course, you'd never let that happen. And the likelihood of it happening is extremely low. But the thing is, if Facebook really just meandered and stayed range bound for multiple weeks, and I just saw nothing at all that I liked on the chart, I would just close this for possibly a modest gain or a small loss, whatever. That's called follow-up action. You'd never actually hold it, and make sure that it expired perfectly at 180 just to get your ass handed to you. You just wouldn't do that. So again, through a variety of scenarios, extremely attractive setup, especially before the time decay kicks in. And if you're completely wrong and it just tanks, you'll actually still make a little bit of money. So again, you should always consider, how can I set up a trade where if I'm right, it'll do what I want it to do and make me lots of money. But if I'm wrong, even really, really wrong, no harm done. And the way you can do that is with a back spread. Anyways, check it out. And I think that's a good enough wrap for today on Facebook. Serial Trader signing off.